Hello everyone, welcome to today's lecture. So today we are going to cover Caro 2020. Remember in last lecture we discussed about to which companies the Caro is applicable. I discussed about the exemption that is BIOS 8, that is banking company, insurance, OPC, small company, section 8 company. And then I discussed for a private limited company, three rules, P1, D1, R10, that is paid up share capital less than 1 CR, debt less than 1 CR, and revenue less than 10 CR. For paid up capital and debt, for paid up capital, it was balance sheet date. For debt, it was at any point during the year, and for total revenue, again at any point during the year. If any of the limit breaches, then the Caro will be applicable. Let us see in detail what the provision says for that. So basically, Caro is applicable to every company. It is applicable to every company, including your foreign company also. So there is no exemption to any foreign company, remember. So it is applicable to every company, including a foreign company. To which companies are exempt from Caro as of today? So if you see, the companies which are exempt are banking companies, which are defined under Banking Regulation Act, insurance company, company licensed to operate under Section 8, one person defined under Section 62, small company defined under Clause 85 of Section 2, then private limited company, not being a subsidiary of holding company, okay, not being a subsidiary of holding company, that's important, of a holding public company, okay. So if a private company is a subsidiary of holding, subsidiary of a holding public company, then that exemption is not available. So private company having paid up share capital and reserve and surplus not more than 1 crore on the balance sheet date, total borrowings exceeding 1 crore, does not have total borrowings exceeding 1 crore from bank or financial institution at any point of the time of the financial year, which does not have a total revenue disclosed in Schedule 3. Total revenue disclosed in Schedule 3. We are not talking about continuing operation. We are not talking about total income, we are talking about total revenue, which will include everything which is disclosed in Schedule 3, exceeding 10 CR. Okay, as per the financial year, during the financial year. So if any of the condition is satisfied, your exemption will go away. Your exemption will go away. Clear? So this is a basic for the, the Caro applicability. Now, majorly what happens is, there is a confusion with respect to this applicability with respect to small companies and OPCs. Now, what happens is, like for the small companies and for OPCs, most people, tend to confuse whether if they, exceed the limit, like which is there for the paid up share capital, for the borrowings, or for the total revenue, whether it will be still applicable to those companies. Simple. The answer is no. So if you have an exemption of a small company, then it will not be applicable to you. It will not be applicable to you. Once you have obtained the definition, exemption of the small company, it will not be applicable to you. Now, so another question, what is a small company? Where it is defined? Okay, if you see the small company is defined under Clause 85 of Section 2, okay. If you go to the Clause 85 of Section 2, that's the definition section, it provides what is a small company, okay, which says that small company is a company small company is a company other than public company other than public company And it has two criteria. One, paid up share capital. Okay. Another turnover. Another turnover. And there is and in between both. So if the company satisfies these two criteria, then it will be called as a small company, otherwise not. Okay. So paid up share capital criteria and turnover criteria. For paid up share capital, okay, for paid up share capital, the criteria is that your paid up share capital shall not, okay, your paid up share capital shall not be more than a specified limit. Okay, so your paid up share capital shall not be more than a specified limit. Now the point is, what is the specified limit and where it is defined? So it's very necessary to see where the definition, where it is defined, that where is this paid up share capital limit defined. So it is defined under rules that the limit for the paid up share capital shall not exceed 4 crore. Okay. So and for turnover shall not exceed 40 crores. Okay. So paid up share capital shall not exceed 4 crore and your turnover shall not exceed 40 crores. It is defined under rule 2, under rule 2 of the definitions 1. Okay. It's defined under that particular rule that 4 crore paid up share capital, 40 crore your turnover, and that has been recently revised. Okay, there was an amendment recently for this particular area in which it was revised from 2 and 20 to 4 and 40. From 2 and 20, it was revised to 4 and 40. Okay, very critical. Now, so this is a small company, 4 crore, 40 crore. Okay. However, if that is a like holding if that is a public company, then this is not applicable. So it should be a private company. Also, it should not be a subsidiary of a public company. Okay. It should not be a Section 8 company. So someone might say, okay, whether Section 8 company falls under the small company? Answer is no. Section 8 company cannot be a small company. Okay. Again, public company cannot be a small company. Subsidiary of public cannot be a small company. A body corporate which is specified, on the specific any act. So a company or a body corporate which is formed under any specific act cannot be a small company. Clear? Okay. So that is the definition of small company. Small company exempt. Now, if you see over here, for a private limited company, the paid up share capital 1 CR, but for small company, it is 4 CR. So if it is small company, let's say paid up share capital, it's 4 CR, less than 4 CR. It is falling under the definition of small company. We will not check for the private limited company. Remember, we will not check for the private limited company in that point in time, because we have already obtained the exemption for the small company, and that is and condition. Paid up share capital plus turnover, it should be less than this. And condition. Okay. Now, some important points that I want to discuss with respect to applicability of the Caro. Okay. So Caro 2020 is equally applicable in cases of branches. Okay. Same, branch auditor has to comply for this one also. Then if, as I said, if a company is already covered under the definition of small company, even if it is falls under any other criteria, still exempt, will remain still exempt. Then important point, paid up share capital includes equity as well as preference, both. Okay. Then share application money is not required to be counted as a part of paid up share capital. Reserves will include capital reserve, revenue reserve, as well as revaluation reserves. Credit balance of P&L account will form part of reserve. Debit balance, if any, for the P&L account, it will be netted off for the computing reserve. If I have a debit balance, I will be netting that off in front of the reserves. When I talk about loan from banks and financial institutions to be counted as the aggregate, okay? And financial institutions will include NBFCs. Loan may be in form of any term loan, demand loan, so there is no, you can say, limit. The word loan is specified, which may include my term loan, demand loan, export credits, and such kind of loans. Okay. It will include short-term as well as long-term loans both. There is no bar on only long-term or short-term. No, all loans. The word specified is loan. Okay. Then okay. Then with respect to for a finance company, let's say it's a finance company, then what will be part of revenue? It will be sale of products, sale of service, other operating revenues that will part of my total revenue, that shall form part of my total revenue. Okay. In respect of other than a finance company. But when I talk about a finance company, my main income is interest, other financial service, revenue from other financial service, other incomes. All these becomes my part of total revenue. And when I talk about total revenue, it is everything. It's not only the main revenue from the financial service or main income stream, but everything, total revenue. I hope it is clear. Any doubts? Okay. If no doubts, then I'll move forward. So let us see some MCQ on this particular topic. Very important. This was recently part of our MTP. Okay. K Fintech Private Limited was having a paid up share capital and reserve of rupees 150 lakh, including paid up share capital of rupees 90 lakh at the end of FY 2021. During FY 21-22, K Fintech borrowed 80 lakh from Bank A and 140 lakh from Bank B. The amount borrowed from Bank B was repaid during the same financial year. For FY 2021, the turnover of the company was 1850 lakh. Select the appropriate option with respect to the applicability of the Caro 2020. What is the option 1? That Caro 2020 will be applicable as a paid up share capital and reserve exceed the specified limit of 1 CR. Caro 2020 will be applicable as the company has paid up capital and reserves exceeding the limit specified in the order 1 crore rupees and have total borrowings exceeding 1 crore from any bank or financial institutions. Caro 2020 will not be applicable as the company repaid the amount borrowed from the Bank B before the end of financial year. Caro 2020 will not be applicable. The company will fall under the exemption provided in Order for Small Company as per 285 of the Companies Act. So what would be the correct answer, guys? What would be the correct answer over here? See, now let us go back. First of all, understand what is the limit for Caro Private Limited Company? Okay. For a private limited company, it is T1, D1, and R10. However, this is for the private limited. For the small company, the limit is P4 and R40. First of all, I'll check for the small company. If it is satisfied the small company, then I'll check for the whether if doesn't satisfy the small company, then I'll check for the private limited. Okay. First of all, it's a private limited. Yes. Is it it's a subsidiary of public? Nowhere it is mentioned. Fine. So it's a private limited. Number one, paid up share capital less than 4 crores. Okay. So we have a paid up share capital over here and reserve 150 lakhs at the end of financial year 2021. Okay. Second, then we have a turnover. Turnover should be less than 40 CR. We have a 1850 lakhs turnover. So turnover is also less than the limit. It falls under the bucket of small company. Now, if it falls under the bucket of small company, I will not check for private limited. I got the exemption, matter done, closed. It's a small company. I got the exemption. So company will fall under the exemption provided in order for small company. That's it. That's my correct answer. I'll not go to any other answer or any other option. Whether it is there, it is not there. No, because I got the exemption, matter over, chapter closed. So I will not check for the private limited thing then. Clear? So whenever you are checking a Caro applicability, first check whether it's a small company. If it is a small company, then if it is not a small company, then you check the other things. Okay, pretty much clear? Any doubt? Okay, cool. So now we will go clause by clause and we will discuss Caro clauses in detail, and we will see we will at the same time we'll solve the MCQs also. Okay. And with respect to the notes, after this lecture, with the comments, so whatever comments I'm providing over here, highlighting or comments, I will be uploading these notes on the portal. Same way, the previous notes for the professional ethics and for for rest of the part of the company's audit are already on the portal. You can download it. Okay. So first, we'll start with the paragraphs of the Caro. Okay. So the first para. So see how Caro works. First of all, we need to understand from where Caro works. Okay. Now, if I talk about for the Caro, so how it works, basically, what is the base of it, from where it is coming? We need to understand that also. So if you see, Caro is coming from basically an order that is specified, company's auditor report order that was revised in 2020. Okay, this is the main source, okay, of the Caro. Now it has 3 parts, or basically 4 clauses or paragraphs in it. Para 1 talks about the title, okay, and applicability that we discussed now. If you see the para 2 talks about that what things are to be reported. Means para 2 says that every report made by the auditor under 143, okay, of the Companies Act, like shall be accompanied with this particular order for the financial year, and shall specify the matters in para 2 and para 3. Okay, So that's a para 2 is something it mandates that okay you need to provide the details in para 3. Auditors report to contain matters. So this is a base which creates reporting liability. It says that every report made by the auditor under 143 shall contain the details of para 3 and para 4. Okay. Now coming to the para 3. Para 3 is the important paragraph of this order which specifies the clauses that we will be discussing now. That is the main reporting requirement, you can say. Okay. Main reporting requirements are contained in para 3 of this order that we'll be discussing. Para 4. What para 4 says that? Para 4 says that it is with respect to unfavorable and qualified answers. Okay. Para 4 talks about unqualified answers. What it says that whenever there is an unqualified or unfavorable answer to any question, okay, auditor is also required to provide the reason or basis of the same. Okay, auditor shall report the basis for such unfavorable answer. Okay, and where the auditor is unable to express any opinion on any of the matters that contained in the para 3, he needs to provide the reason why it is not possible for him to provide the opinion. So if there is any unqualified answer, the auditor is required to specify the reason. Plus, if there is any, he is not able to express opinion, unable to express opinion, then also he needs to provide the reason for the same. Okay, so that is the content. Only 4 paragraphs are there in the full Caro report order. 4 paragraphs, but these 4 paragraphs, applicability and title that we saw now, para 2 is the main base that creates, the reporting requirement for each and every auditor. Para 3 is the important clause by clause detail that we will discuss now, and para 4 is the qualified and reason for the qualified or unable to express opinion. That's the structure of the order. Okay. Now, when I talk about the paragraph para 3.1, okay, or para 3.2 or whatever clauses we will discuss, now you will know that from where it is coming. What is 3.1? The third paragraph in an order where there are total 4 paragraphs, and we are talking about 3.1. Okay, the first clause of the third paragraph. So when I say para 3.1, it's a paragraph 3 and clause 1, which talks about fixed assets. Now let us see the clause 1. So para 3.1 requires auditors to report on few matters with related to the fixed asset. One is adequacy of records. Second is the physical verification. Third is the title deeds. Fourth is the revaluation of plant and property. Fifth is with respect to the Benami proceedings. Okay. Fifth is with respect to the Benami proceedings. Now, what is the adequacy of records required to report that whether the company is maintaining proper records showing full particulars, including quantitative details, okay, of property, plant, and equipment. Second, whether the company is maintaining proper record, full particulars of intangibles. So first, I'm talking about PPE. Then I'm talking about intangibles. So whether adequate records are maintained or not. Second, physical verification. Whether these plant, property, and equipment has been physically verified by the management. Physically verified by the management at reasonable intervals. Whether any, this has been physically verified or not. Okay. Very important. Now, sorry. Simultaneously, on the same line, what I'll be doing is I will be showing you guys the live audit report so that you will come to know that, okay, how it is reported in uh, real audit report. Okay, just a minute. So again, I'll request don't go on the name of the company. Uh, don't go on the name of the company. Just a minute. So plus basically. Okay, this is for the Caro 2020 of one of the company. Okay, now if you see, it says that for the first one, proper maintenance of books of account. So it says that company has maintained proper records showing full particulars. Okay, so full particulars are there, and the company has maintained proper records showing full particulars of intangible assets. So both is specified over here. So plant property and equipment and my intangibles. So if there is no negative remarks, I can specifically require. I can specifically say that company has maintained. Second, plant property and equipment were physically verified by the management in accordance with the planned program of verifying them once in 3 years, which is reasonable having regard to the size of the company and nature of its asset. So if there is any negative comment, otherwise I'll say, okay, it is appropriately fine. So what was the thing? This physically verified by the management at reasonable intervals. Yes, it is being verified by the management at the reasonable intervals or whatever policy it is. Whatever policy it is, it's verified. Okay. Then the next point is whether, very important one, because this is a very crucial point which talks about the recent changes in the Caro. So what it says that, it says that whether the title deeds of all the immovable properties are duly executed, other than the leases, which are disclosed in the financial statement are in the name of company. Are in the name of company. If yes, then what do you say? Like it's good. Otherwise, otherwise provide the details. If they are not in the name of the company. Now, what are the details we need to provide for that? Title deeds of all the immovable properties held in the name of company. If not, provide the details. And what are the details? What you need to provide is description of the property, gross carrying value of the property. Okay. Then you need to provide whether it is held in the name of with whose name it is held. Let's say, for example, it's a description of the property. It's a plot at, let's say, XYZ location. Gross carrying value in my books, let's say 55, let's say 75 CR. Held in the name of maybe promoter. Or you can say here we need to write the name. Let's say it's held in the name of Mr. X. Who is Mr. X? Mr. X is a promoter. Okay. Period. Since when it is, being held in the name of promoter. Let's say when I purchased the plot, it was purchased in 1980. Since 1980, date of purchase. Okay. And reason for not being held in the name of company. Reason for not being held. So I need to provide the reason also why it was not held. Maybe disputed property. That's why it's not held in the name of company. So disputed. So such for each and every item which is not held in the name of company, I'm required to provide this information. If you see in our example, it says that title deeds of all the immovable properties are held in the name of company, except for the leasehold land disclosed in point number 17 to the standalone financial statement, in respect of which allotment letters are received and supplementary agreements entered. However, lease deeds are pending execution. So it's provide, okay. Other than this, everything is the name of the company. This is how the reporting is done. Clear? Any doubt till now? Any doubt? No? Okay. Oh, okay. So, yeah, I think there is some problem with the highlighting colors. It's not coming. Wait a minute. Let me reshare the screen. Let me see if, it's possible. I think still the same. Just let me check. Okay, what I'll do is I'll not use highlighter as of now. Reason because I think there is some problem with respect to the colors. Okay, so I'll remove it so that we can discuss it appropriate. Okay, yeah. So yes, okay. So there is one question that if company does not follow any clause, then it will be we need to delete the clause or we need to write that this clause is not followed. What we need to do? So if in Caro, if company does not follow any particular clause or company does not any clause is not applicable, can we delete the clause? See, if any of the clause, if any of the clause is not applicable to a company, you need to provide that detail. Okay, yes, this clause is not applicable to the company. We cannot say that this clause will not be is not we cannot delete the clause. That is for sure. You cannot delete the clause because uh, if a clause is not applicable, you need to specifically mention, okay, this clause is not applicable. The option to delete is not available. So if I have to tell you, if I have one example, I can show you where I can write, this clause is not applicable. Let me see if I have that particular example available where I can show you, yes, actually this clause is not applicable. See, if you see here in this clause, we will be discussing this clause where it says that the company has not guaranteed any loans or provided any guarantees or securities to parties covered under 185 of the Act. If the company has not given anything, this clause is not applicable, but we specifically write. We'll see in the rest of the clauses when there is, what you say, there is with respect to some Nidhi companies or some details are there. So we will see at that time also we that whether this is applicable, not applicable, what is applicable. Okay. So at that time also we'll see that particular detail. But if it is not applicable, we need to write specifically that it's not applicable to the company because XYZ reason. But we cannot say that it is, applicable. We cannot delete the clause from the particular, what you say, report. Any further doubts? Or if I have one more example, I'll show you with one more live example that will, give you more clarity. Okay. I'll suggest don't focus on particular, name of the company. Just I'll show you example. Yeah. See, the company is not an AG company as per the provisions of this particular act. Therefore, the requirements to the report on clause this and this of the order are not applicable. So that's this is how we write it for if it is not applicable. And if I show you the one title deed example, see the title deed of the immovable properties other than the lease is disclosed in note 41 to the financial statement are held in the name of company except freehold land, gross carrying value in rupees, held in the name of whatever name it is. Whether promoter, director, relative, answer is no. Period held in April 1, 2014, and the reason for not being in the same of company under litigation at Civil Court of Gujarat, whatever it is. So it says that okay, this is the reason why the title deeds are not in the held of name of the company. Okay. Then coming back to the revaluation of plant property. So whether the company has revalued its property, plant, equipment, including right to use of assets or intangible assets, or both during the year. If so, whether the revaluation, very important, whether the revaluation is based on the valuation by registered valuer, specify the amount of change. If change is more than 10% in aggregate net carrying value of each class of plant property and equipment or tangible assets. So two things. One, if I just remove this, I'll specify two important things over here. One, whether the revaluation is based on valuation by registered valuer, then amount of change if change is 10% or more. So first of all, you need to provide about the revaluation. Same way, if I show here, In this case, company has not revalued. Company has not revalued its plant, property, and equipment, so it will not come. But where it has revalued, we need to provide what is the revaluation done on what basis, and if the change is more than 10% of the net aggregate value, then what is the change? Benami property proceedings. Whether any proceedings have been initiated or are pending against the company for a holding any Benami property under Benami transactions or this particular act and rules. If so, whether the company has appropriately disclosed the detail in financial statement. So for the Benami property, whether the details have been disclosed. See, there are no Benami properties initiated or pending against the company for holding any Benami property under prohibition of Benami Property Transactions Act and rules made thereunder. If there is nothing, we'll say there is nothing. If there is there, we'll mention the issue over there. Any doubts? Okay. Physical verification. Now the second point start for the inventory. This was fixed assets. This was pure fixed assets, para 3.1. Okay. Now we will start inventory. Okay. So first point for the inventory, physical verification. Same like plant, property, and equipment. Physical verification, we will be discussing that whether physical verification conducted at a reasonable interval. If yes, okay, in the opinion of the auditor, then the coverage and procedure of such verification, whether any discrepancies of 10% or more in aggregate has been noted, okay, and whether it has been properly dealt in the books of accounts. So, first of all, coverage and procedure of such verification, discrepancies more than 10% and properly dealt or not. See, let us see now how it is reported in the live example. The inventory has been physically verified by the management during the year. In our opinion, the frequency of verification by management is reasonable. Coverage and procedure for such verification is appropriate, and the discrepancy of 10% or more in each class of the inventory were not noticed in respect of such verification. So there was no discrepancy, hence it is fine. Okay, so this is how I need to report for the inventory. Then whether during at any point in time of the company of the year, the company has sanctioned working capital limits in excess of 5 years, in excess of 5 years. Okay. In excess of 5 years, if yes, then what is the basis of security? Whether quarterly or statement returns shall be filed by the company with such banks. Okay. And whether they are in agreement with the books of accounts. So quarterly statements that whether has been filed or not, whether the statements are in agreement with the books of accounts, what is the basis of security that has been given. Okay, when it is excess of 5 years. Now let us see the example. The company has not sanctioned any working capital in excess of 5 years. Okay, from banks or financial institutions during any point of the year. Hence, accordingly, the requirement of this particular clause is not applicable. So this is how we need to report. Usually it is like, like the details are whether there is a, favorable or not favorable. So the details are according, case to case basis. Let's say, for example, another. As disclosed in the note 21.4 of the standalone financial statement, the company has sanctioned working capital limits in excess of 5 CR in aggregate from banks during on the basis of security of current assets classified by the company. So here the security is current assets which is classified by the company, and quarterly returns filed by the company with such banks are in agreement with the books of accounts. So if it is a favorable, I'm not required to provide any further detail into that. Okay. This is how I'm required to report for the clauses in my audit report. Okay, so there is one question with respect to Benami property. What is the clause for the Benami property is whether any proceedings have been initiated. So it talks about the proceedings initiated or pending against any company for holding any Benami property under a specified act. So if I talk about it, talks about any specified act. Okay, for the Benami property. Now, in this particular act, if there is a property which is not in a proper name or in the name of a person who is not existing or any proceedings have been initiated, we need to disclose such proceedings. Clear? So it is with respect to such properties where there has been proceedings under this particular act. Okay. Very important clause, I'll say. This clause is basically, dealing with my loans and advances. Para 3.3 or clause 3 of para 3. Loans and advances. Okay. Very important. The reason because this is it contains a lot of details. I think this is not appearing properly. Okay, fine. Okay. Now, what this clause requires us to report is whether during the year company has made any investment, okay, in or provided any guarantee or investment or loans and advances, okay, granted any loans and advances or security in the nature of loans, secured, unsecured to any companies, firms, limited liability partnership or any other party. So whether during the year company has provided yes or no. If yes, then provide these details. Okay. If yes, whether during the year company has provided loans in the nature of or advances in the nature of loans, standing guarantees, securities to any other company. Okay. To any other company. Now this is not applicable to a company whose principal business is to give loans, which is NBFC. Okay. It is not applicable to a company whose principal business to give loans. So that is NBFC. Other than NBFC, if any company has provided any loan to any other company, other entity. Now what is this other is? That is not a related party, or you can say subsidiary, joint venture or associate. So we need to provide the aggregate amount during the year and the balance outstanding at the balance sheet date with respect to such loans, advances given to subsidiaries, joint ventures, associates, and aggregate amount during the year and balances outstanding at the balance sheet date, okay, with respect to such loans, advances, or guarantees to parties other than the subsidiary, joint venture, and associate. So if during the year, okay, if the company has provided any loan to any other entity, which may be subsidiary or not, so in that case, we need to bifurcate what was the loan given, what is the balance outstanding. So two things we need to provide: aggregate amount given during the year, balance outstanding at the balance sheet date for subsidiaries, joint venture, and associate. Again, aggregate amount and balance outstanding for other than subsidiaries, joint venture, and associate. Let us see how it is reported. During the year, company has granted loans, stood guarantees, and provided securities as summarized below. Aggregate amount granted provided the year. This was the guarantee, security, loan, and in that subsidiary, other related entities and others. Balance outstanding at the balance sheet date, subsidiaries, other related entities and others. So this is the amount for guarantees, securities and loans, excluding perpetual securities. This is how it is reported. And it says that during the year, the company has not granted any loans, advances in nature of loans, stood guarantees, provided any securities to any firm or limited liability partnership. So firm is not there, LLP is not there. For others, it is mentioning over here. This is how we are required to report. Any doubt till now? Any doubt with respect to this one? Point number one for the loans and advances. Very critical. So it says that loans and advances provided and their outstanding balances. That is the first one. Second one, we are talking about only loans and advances as of now. Second one, whether the investment made, guarantees provided. Okay. So investment made, guarantees provided, and terms and conditions of those loans granted. Okay. Are not prejudicial to the company's interest. So whether the terms and loans of all the terms and conditions of the grant of all loans and advances, securities, guarantees, uh, whether it is prejudicial to the interest of the company, whether it is something not appropriate. So we need to mention over here. And how it is reported? During the year, investment made, guarantees provided, securities given, and the terms and conditions of grant of all loans and advances in nature of loans, investment, guarantees to the companies are not prejudicial to the interest of the company. If there is something inappropriate, then we will report, otherwise not. Repayment. Then the next clause is repayment. In respect of loans and advances, okay, whether schedule of repayment of principal and interest of payment of interest has been stipulated, and whether repayment or receipts are regular. So we are talking about schedule of repayment for principal and interest, and whether the repayments are regular or not. Very important. So I'm required to provide about the repayment, and let's see how it is there. The schedule of repayment in respect of loans granted for the principal and interest payment has been stipulated, and the repayments or receipts are regular. Accrued interest has been capitalized at the year end with the amount of outstanding loans as per the terms of agreement. So if there is negative, I will provide, otherwise I will not. Clear? Okay. Next point is for the recovery. Next point is for the recovery. Okay. Now, when I talk about recovery, it talks about that if the amount is overdue on any of the loans, okay, state the total amount overdue for more than 90 days. Very important. Over 90 days, and whether reasonable steps have been taken to recover the principal and interest both. Again, principal and interest both. When the amount is overdue above 90 days, whether reasonable steps have been taken by the company to recover that amount. If yes, then the details thereof. Okay. Now, if I have one example to this, let me show you how it is reported. So here, if I show you, yeah, see, point number D. According to the information and explanation given to us, on the basis of our examination of records of the company, there is no overdue amount for more than 90 days in respect of any loan given. In earlier example also, it's the same. There are no amounts of loans or, there are no amounts of loans and advances in the nature of loans granted to the company which are overdue for the 90 days, for more than 90 days. So if nothing is there, then we need to report it accordingly. Then evergreening of loans. Now, what is evergreening of loan is? For the old loan, a new fresh loan is issued in front of that to settle off the old loan. Okay. So by that way, you evergreen the loans. So that's the question. Let's see whether any loan or advances in the nature of loan granted which has fallen due during the year has been renewed or extended, or fresh loans granted to settle the overdue of existing loans given. If so, specify the aggregate amount of such loans, then percentage of the aggregate to the total loans or advances in the nature of loans granted during the year. So it says that whether any loans or advances given against, like for the loans which was due in the current year, okay, to settle the overdues of existing loan, means I'm giving a new loan to settle the existing loan. That is, I'm just renewing the loan. If yes, specify the aggregate amount and percentage of the aggregate to the total loans. Let us see if I have an example for this. So basically, in my example also, like it says that no loans granted or have fallen due during the year and have been reviewed to settle the overdues of exceeding loans. So there was no loans granted. If there was there, so you need to specify the limit, specify the amount and the percentage to the aggregate loan. Last, with respect to the loans, is loans without any terms. Okay. So whether the company has granted any loans or advances which is either repayable on demand or without specifying any term or period of repayment. If so, then aggregate amount and percentage to the total loans granted. And out of that, aggregate amount of loans granted to promoter or related parties defined under clause 76. So three things here. First, whether the company has granted any loan without specifying any term. If yes, then aggregate amount, percentage to the total loans. Okay. And then third point is aggregate of amount of loans granted to promoters. Three things. And how it is reported, if I show you, based on our verification of records, the company and information explanation given to us, the company has granted loan either repayable on demand or without specifying any terms of repayment, and which are as follows. Repayable on demand, this much amount. All parties, promoters, not there because we are specifically required to report for the promoters, and for the rest of the related parties, this much. So this is total loans. This is two related parties, and this is two promoters. Aggregate amount, not specifying any term, it is not there. Now percentage of total loans, if you see the percentage over here, total loans and advances in the nature of total loans. Okay, so it is provided over here. Now this is total repayable on demand. And when I talk about this, is total all loans with repayment schedule. So here it's only like repayable on demand, total repayable on demand, this one. So I need to say the total repayable of demand divided by my total loans, that will give me a percentage, that is this one, 35.19. Just an example. Clear? Any doubt till now? Any doubt till now? Okay. If no doubt, then let me take one more MCQ. Okay. So that was one of the question which was asked in exam. Mr. Arjun was appointed as an engagement partner on behalf of Bisham and Company, a chartered accountant firm, for conducting statutory audit of Sinwar Limited, unlisted public company. Mr. Bridges, one of the senior engagement team members, was given responsibility to audit the matter as per the requirement of Caro 2020. And in that connection, he made the following observations that may be relevant for the reporting as per the said order. Observation. One of the plant and equipment taken on the lease, right to use of asset, by Sinwar Limited was revalued based on the valuation by registered valuer, and the net carrying value of the plant property equipment in aggregate was changed by 4 to 4.5 CR. Now, for this first point, where and what reporting is required? You tell me where and what reporting is required for the first observation. So where and which type of reporting is required? Remember, for the revaluation, we were talking about uh, revaluation of property. If there's a revaluation of property, I need to say whether it has been revalued based on the registered valuer and amount of change if change is more than 10% in the aggregate net carrying value of each class of property, plant and equipment or intangible. Okay. So whether there has been revaluation, yes or no. If yes, whether it was based on registered valuer, yes or no. And I need to specify the amount if it is more than 10%. Over here, if you see whether it was registered valuer, answer is yes, this is a registered valuer, valuation by registered valuer. Whether the change has been more than 10% now of net carrying value. So earlier the net carrying value was 4 CR. Now it is being to 4.5 CR, 4.5. Whether this is more than my 10%. So if yes, then I need to disclose the same. Okay, I need to disclose the same in my report, Caro report. This change is my 11.5%, more than 10%. This is more than 10%. So what I need to do is I need to report accordingly. That is, according to the clause 1 of para 3, Caro 2020, auditor is required to report whether the company has revalued its plant property and equipment. If so, whether the revaluation is based on valuation by registered valuer. If yes, specify the amount of change if the change is more than 10%. Okay. So in the current case, the change is 45 lakh rupees, which is more than 10%. So I need to specify this amount. And yes, it has been based on the valuation by the registered valuer. Okay. So I need to report in para clause 1 of para 3, 1D. That is important, where you need to report. Correct. Correct, 60. So 3.1D, not only D, 3.1D. Okay. Okay. Now let us see next one. next clause. So now it is a clause with respect to the compliance. Okay, what this clause says that it talks about the my compliance with section 185 and 186. Para 3(4). It says that in respect of loans, investment, guarantees, securities, whether the provision of 185, 186 of the Companies Act has been complied with. If not, then provide the details. So it talks about whether the provisions of 185, 186 has been complied with or not. Then compliance to related or public deposits. Para 3(5). So in respect of deposit accepted by the company, okay, in respect of the deposit accepted by the company, or the amount which has been deemed to be deposits, whether the directives issued by the Reserve Bank of India and the provisions of section 73 and 76 and other relevant provisions of the Companies Act have been complied with. Okay, if not, nature of the contraventions to be stated over here. Okay, further, if any order has been passed by the Company Law Board, National Company Law Tribunal, or Reserve Bank of India, okay, or any other tribunal, whether the same has been complied with or not. So if there is any, public deposit with the company, if a company has accepted any deposit, whether the provisions of 73 to 76 section of Companies Act, directives issued by the RBI with respect to the public deposit, have been complied with or not. If not, then the order passed and whether the order has been complied with or not. So that is related to the public deposit. See, let us see some of the examples. This was with respect to the 185. So, in our opinion, according to the information, explanation given to us, company has not directly or indirectly advanced any loan to person covered under 185 of the Act or given guarantee in connection with the loan by any such person complied with the provision of 186 in respect of the investment loans or guarantee given to the extent applicable. So they have complied in. So 185 is not applicable and 186 is they have complied. Now with respect to the public deposit. So it says that company has not accepted any deposit from public within the meaning of section 73 to 76 of the Act and rules framed thereunder. Accordingly, paragraph 3(4) of the order is not applicable to the company. According to the information, no order has been passed by any of such tribunal, hence nothing to report. So if it is applicable, then it will be reported here, otherwise not. Clear? Okay. Next one, cost records. Para 3(6). Cost record says that whether the maintenance of cost record has been specified by the central government under subsection 1 of 148 of the Companies Act, okay, and whether such accounts and records have been made so maintained. Let us see. So it talks about whether the cost record has been specified. If yes, whether they have been so made and maintained by the company with respect to the cost records. Let's see the one answer how it is, actually reported. We have broadly reviewed the books of account maintained by the company in respect of sale of electricity, where maintenance of cost record has been specified by the central government. Okay, so that is one of the company which sells the electricity. So it's an electricity company. And they will say the records have been prepared and maintained. We have not, however, made a detailed examination of the records with a view to determine whether they are accurate or complete. So they have seen the records are there and maintained. Over here also, if I say, we have broadly reviewed the books of account maintained by the company pursuant to the rules made by the central government for the maintenance of cost records related to the generation of power And we are of the opinion that the specified accounts and records have been made and maintained. We have not, however, made a detailed examination of the same because that is done under the cost record. So for the cost record, the cost audit has been done. Their detailed examination is being performed. Here it is only they are required to report whether the books of account has been made and maintained or not. So that is there. Clear? That was with respect to the cost record. Again, very important clause. Statutory dues. 3.7. First, we need to specify depositing of statutory dues by the company. Okay. And outstanding dues more than 6 months. Then we need to specify the details of disputed dues. Now let us see the detailed clause. Whether the company is regular in depositing undisputed statutory dues, okay, which will include GST, sales tax, service tax, custom duties, okay. If not, then the extent of the arrears of outstanding statutory dues as on the last day of financial year concerned for a period of more than 6 months, okay, from the date they become payable. So we need to specify outstanding dues, which is not undisputed statutory dues as on last day of the financial year that are outstanding for a period of more than 6 months from the date they become payable. Okay. If there is any such due outstanding for more than 6 months on the last day of financial year, we need to specify the details. Now, with respect to this disputed, okay, where any statutory dues referred into clause subclause A have not been deposited on account of a dispute, then amount involved, the forum where the dispute is pending, okay, shall be mentioned. A mere representation to the concerned department shall not be treated as a dispute. If only representation has been made to the department, that will not be counted as a dispute. Let us see one of the real life example. Based on the records and everything, according to the explanation given to us, the company is generally regular in depositing undisputed statutory dues of income tax, though there has been slight delay in few cases, and is regular in depositing undisputed statutory dues, including provident fund, goods and service tax, other material statutory dues as applicable. There are no undisputed amounts payable in respect of applicable statutory dues as on 31/3/2022 for a period of more than 6 months. Okay, so there is nothing outstanding for more than 6 months, but there was slight delay, so they mentioned the slight delay. Now, second point is disputed ones. Details of the statutory dues in referred in clause A, which have not been deposited on 31st March on account of dispute. For dispute, what was the scenario is we need to provide account of dispute. Okay, like what was the dispute? Okay, forum where it is pending, amount involved. So we need to provide these details. Let us see. Name of the statute under which it is like what is the due, nature of the due, amount involved, period to it which relates, and the forum where it is pending. So it is income tax related. Amount is 474 lakhs, AY 1011. It is with CID appeals, Mumbai. In case of entry tax, 30 lakhs, 1011. It is pending with Deputy Commissioner, Commercial Tax. So like this way, we are required to provide the details for this disputed due. Any doubt? Any doubt till now? Okay. If no doubts, what I suggest is let's take a quick 10-minute break After the break, we'll gather back and we'll continue for the rest of the clauses. Okay. Let's take a quick 10-minute break. Hello, everyone. Welcome back. So let's quickly start the rest of the clauses and the paras of Caro. Okay. Till now, we saw till statutory dues. I show you. I displayed the live example also how it is reported in the actual audit report. Okay. Then now we will go to the undisclosed income paragraph. Para 3A. Okay. It talks about undisclosed income. So it says that whether any transaction which has been not recorded in the books of account, surrender or disclose for income. Okay, surrender or disclose for income. Basically, remember there was one scheme wherein if any income has been not been disclosed, you can disclose in your tax returns and tax assessment. So if any transaction that was not recorded in books of account, okay, and has been surrendered or disclosed as income during any assessment year, okay, under Income Tax Act, then whether the previously unrecorded income has been properly recorded in the books of account during the year. So I need to provide whether previously unrecorded, now properly recorded for any transaction that was surrendered to income tax. Okay, that is something I need to specify. So if I show you one example, that is, see here, there was no transaction relating to the previously unrecorded income that was surrendered disclosed as income during the tax assessment under Income Tax Act 1961. So that is there. Okay. So that is with respect to my disclosure for the undisclosed income. Let us see one more example in the current case. So that is not related to this particular clause, but just to recap for the recap of the previous one. So earlier we saw an example where there was revaluation related. Now there was second part of that particular one, which talks about during the year under consideration, cash credit limit of 5.5 crore sanctioned to Sinwar Limited by DMC Bank based on the security of current asset, which was reduced to 4.6 crore after 6 months. In this connection, quarterly returns have been filed by the company with DMC Bank, which are in agreement with the book of account. So remember, there was one of the examples where whether we have taken cash credit or overdraft limits, and if it is below a specified limit, then we are required to disclose certain things. Let us go back and see. Remember, in case of inventories, it was there whether during any point of the year the company has sanctioned any working capital limit, any point in the year. So the important is any point time of the year in excess of 5 CR. Okay, in excess of 5 CR. And what is the basis of security? Quarterly returns have been filed by agreement, whether such quarterly returns are in agreement with books of account. In our case, it was there 5.5 CR, then it was later reduced to 4.5 CR. So you tell me whether this particular clause will be applicable. Answer is yes, because it says at any point. So at a point in time, it was 5.5 CR. So I need to report that. Okay. So as per clause 2 of 2B of para 3, okay, as per clause 2 of clause 2B of para 3 of Caro 2020, okay, the auditor is required to report with respect to any point in time of the year in excess of 5 crores, okay, section of working capital limit. Then I need to specify the security of current asset, quarterly returns, okay, and whether these are in agreement with books of accounts. If yes, then I need to provide every this detail. So here it is cash credit limit of 5.5 CR, which is exceeding the limit of 5 CR. security of current assets. Quarterly returns have also been filed by the company with BNC Bank, which are in agreement with books of accounts. So I need to report in clause 2 of para 3 of Caro 2020. Clear? Any doubt? Okay. Let us see one more. So that was asked again in exam. Very good and important question. So it contains two different parts. GEM Private Limited was engaged in business of manufacturing of cycles. CA Roy was appointed as a statutory auditor of the company for financial year 21-22. During the year under audit, GEM Private Limited obtained working capital facilities from ABC Bank Limited for rupees 10 crore hypothecation of the stock of goods as primary security. On inquiry, CA Roy was informed by management that the stock statement are furnished periodically to the ABC Bank Limited, and the details of submission of the quarterly stock statement are as follows. Stock value as per books of account at the end of quarter 11.5. Stock value submitted to ABC Bank Limited at the end of quarter 14, 14.75, 17. So like this way for the quarter 1, quarter 2, quarter 3, quarter 4, these values are given. So there has been difference in each of the statement and books of account except for quarter 4. Okay. The management of GEM Private Limited did not disclose the above variation in the notes to account forming part of financial statement of the company for year ended 21-22. Okay. The management replied there were no variation as on balance sheet date. Further, there are a view that the stock statement furnished to bank is the only formality and computed arbitrarily only for the purpose of securing high drawing power, and hence statutory auditor need not to be bothered. Is this contention of the management valid? As a statutory auditor, how CA Roy should deal and discuss the disclosure reporting requirement, if any, as per the Companies Act 2013 and Caro 2020. So there are two requirements, Companies Act and Caro 2020. But as of now, we will only see Caro 2020, not Companies Act. Okay. So Caro 2020. What is the requirement? In excess of 5 CR, if any cash credit limit where is given, then the details of security, whether quarterly returns have been filed, and whether they are in agreement with books of account or not. Let us see. As per paragraph 3B, 32B of Caro 2020, okay, we need to specify whether any point in time, again, any point of time in excess of 5 CR, any working capital limits has been sanctioned by banks or financial institution on the basis of security of current assets. If yes, then quarterly returns have been filed. If yes, whether they are in agreement with books of accounts. In the current case, there has been a 10 CR facility which is in excess of 5 CR. Quarterly returns have been filed, but there has been variation in quarterly return in quarter 1, 2, and quarter 3, and accordingly we should report that that as per Caro, stock value as per books of account, this was there. Stock value as per quarterly return submitted to the bank, this was there, and excess reporting of the stock to bank by this much amount every time. So we need to provide this detail in Caro 2020 clause para 32. Okay, 32D. We need to provide this 32B. We need to provide this detail because this is the difference in each and every quarter except for quarter 3. So 32B will be disclosed like this way. Clear? Any doubt till now? Any doubt? Okay. Let us see one more MCQ in this case. While auditing with respect to the compliance with Caro for 2020, Mr. Om Prakash, for additional reporting purpose, observed the following relevant to the para 3(7) of the Caro 2020. Provident fund 1.5 lakhs, date payable 24 September, date paid 27th March. GST 2.45, date payable 23, date paid 24 April. Custom duty 0.65, 28th September was due date, paid on 10th April. Income tax demand for AY 1920 0.55, 18 October was due date, not paid till date. Also, a representation was made to GST department for waiver of penalty of 1 lakh for late payment of GST demand. What is the total amount of statutory dues need to be reported by Om Prakash as per para 3 of Caro 2020? So what should be the total amount that should be reported over here under para 3 of 7, para 3 clause 7. Now, if you see the para 3 clause 7, it talks about statutory dues outstanding, undisputed statutory dues outstanding, or as on last day of financial year for a period of more than 6 months. Means if they are outstanding for more than 6 months, means if I say last day of the financial year, simple, 31st March, and if it is outstanding for more than 6 months, that is before my 30th September, then they become then they become payable. Okay, if the due date is before 30th September, okay, and if it is outstanding till 31st March, then that particular amount will be more than outstanding for more than my 6 months. In that case, what I need to do is, if it is undisputed statutory due, I need to report it. I need to report that undisputed statutory due. Okay. And again, another point, if it is a disputed, then I need to provide separately. See, for the disputed one, it is written that a mere representation to the concerned department shall not be treated as a dispute. So in our example, two things. One, there was a representation made to GST department for waiver of penalty. This is not a dispute. This is not a dispute. So as of today, what is outstanding? As on last day of financial year, this is outstanding because this was having due date, okay, of custom duties for more than 6 months. Again, which is the amount which is outstanding? This was outstanding for more than 6 days, but it has been already being paid. This is 18 October, okay, but this is more than 6 months as on financial date. Answer is no. Accordingly, I need to check which amount is more than 6 months. So what will be the answer? Pretty simple. What will be the answer, guys, in the current case? Come on, pretty simple. So in the current case, your answer will be C. I need to see according to 6 months criteria. Okay. Otherwise, I won't be able to get the thing. So if my more than statutory dues, are outstanding for more than 6 months, that is something I need to consider over here. Okay. And I can find only more than 6 months, one item, 0.65, that will be there. That is the outstanding that will be reported. So my answer will be 0.65, which is more than 6 months. Clear? Any doubt? Any doubt till now? Okay. So there is one question with respect to our earlier example, that is, which amount is required to be provided in Caro, whether the higher value of the stock, lower value of the stock, or difference? Answer is three of them. So you need to provide variation plus higher and lower. Okay. So all the three are required to be provided in Caro. So any other doubt? Any other doubt till now? Okay. So there is one doubt with respect to the 6 months criteria over here. See, when I'm counting, what is the provision? First of all, says that as on the last day of the financial year for a period of more than 6 months, if it is outstanding, then I need to report the same. Okay. If it is outstanding for more than 6 months, I need to report the same. Clear? Is it outstanding for more? Which amount is outstanding for more than 6 months on the last day of my financial year? That is something I need to report. If this amount is outstanding for more than 6 months, then I'm required to report that amount. What is outstanding for more than 6 months in my example? Custom duties. Then this amount I'm required to report under outstanding for more than 6 months, undisputed. Now, some will say that whether the GST penalty waiver is my, what do you say, is something, disputed one. Answer is no, that is not a disputed one. Clear? Any doubts still? Any doubts? Okay. If no further doubts, then we can proceed further. Now, now let us see rest of the clauses. Okay, there is one doubt. The difference in all four is above 6 months. Okay, fine. Let me explain. What I need to do is, as on 31st March 2022, I need to see which my statutory due is outstanding for more than 6 months. Now, if I say more than 6 months as on 31st March 2022, that will go to if any outstanding before 30th September 2021. If any statutory due is outstanding since before 30th September, that will qualify for 6 months as on 31st March. The clause says that it should be outstanding. I'll reframe it. Clause says that it should be outstanding, arrears outstanding. Okay. As on the last day of the financial year, that is my 31st March, for a period of more than 6 months. So, as on 31st March, if it is something outstanding for more than 6 months, by default, the due date was before 30th September. That's why it has become due for more than 6 months. See, as on 31st March, if something outstanding is there for more than 6 months, the due date should be, or must be before 30th September. Otherwise, your 6 months cannot be get completed by 31st March. So, in our example, 31st March, as on 31st March, which is outstanding before for more than 6 months. which is outstanding like more than 6 months. Any item which has a due date before 30th September will only qualify as a 6 month as on 31st March. That is the last day of my financial year. So this is the only item I can see which has a due date of before 30th September, which is not paid till 31st March because still outstanding on the date of on the last day of financial year. And this will be my only answer. This is not the answer. Reason because it has been paid before the close of financial year. This will not be there because this is not due for 6 months as on last day of my financial year. If you count 23 October to 31st March, this will not be 6 months. This will be less than 6 months. In last case again, 18 October to not paid. But if not paid, still I need to take last day of financial year to calculate my period. Again, it will be less than 6 months. That's why these both will not be counted. I need to count only where the difference is more than 6 months till 31st March. So correct answer is 0.65. This is just to confuse you. Just for the confusion, nothing else. If we'll ignore this sentence, perfectly fine. Yes? Okay. Now let's move forward to the next one. Next clauses. Very important clause. Very important. That is with respect to the repayment of dues, loans and advances. Okay. Now, if first says that this is para 3(9). Okay. First, repayment of default and repayment. If whether any company, whether the company has defaulted in repayment of loans or other borrowing, or in the payment of interest to any lender, if yes, then the period, the amount of default to be reported as per the below format. This is the format prescribed. Okay. Nature of the borrowing, name of the lender, amount not paid on due date, whether principal or interest, number of days of delay or unpaid, remarks. This is how it is required to be reported for default and repayment. I'll show you one live example. See, based on the information and explanation, the company has defaulted in repayment of its loan or payment of interest as follows. Nature of borrowing, rupee term loan, name of lender, Axis Bank or whichever bank it is. Okay. Amount not paid on due date as on 31st March 2022. This much amount was not paid. Period maximum days, like outstanding. This was the due, outstanding, not paid. The interest as on 31st March. This was principal, now interest. Period. Remarks. These are the 6 quarterly installments which are not paid. 3 quarterly installments. 1 quarterly installment. Obligation towards bank guarantee invocation. So these are certain amounts which are not paid. Second, non-convertible debenture. Yes, bank. This is the amount which is not paid. And period. So this is how it is required to be reported for my debenture. My loans which are not paid. There's a default in repayment. See, here it is there. The company, the above delay is considered up to September 26, 2021. With effect from September 27, 2021, the company entered into a composite settlement scheme agreement with Yes Bank, which is not yet terminated, and extension of standstill is under consideration by Yes Bank. Hence, calculation of delays of days for Yes Bank period is from September 27, 2021 to 31st March. Has not been considered. Okay. So if there is any such, the consideration is there, we need to mention it. Okay. Defaulter, whether the company has been declared a willful defaulter by any bank, institution or other lender. Next, whether the term loan were applied for the purpose of which they were obtained. If not, the amount of loan so diverted and for the purpose, if it is used like other than what is used for. Whether the funds raised on the short-term basis have been utilized for long-term purpose. If yes, the nature of amount and like the nature and the amount like that is being used. Whether the company has taken any fund from any entity or person on account to meet its obligation of subsidiaries, associates, joint ventures. If so, details thereof with the nature of such transaction and amount in each case. So, whether I have taken any fund from any of the entity, okay, to meet the obligation of my subsidiary, joint venture or associate, yes, I need to mention the amount in each of the case. Whether the company has raised any loan during the year by the pledge of securities held in the subsidiaries, joint venture or associates. If yes, give the details thereof and also report if the company has defaulted in repayment of such loan. So whether I have raised any loan by pledge of securities held in subsidiaries, if yes, the amount of loan and if any default has been done. Let's see the live example. So in first of the case, if you see, based on the audit procedure, we report that the company has not been declared the willful defaulter. Second, the company has not raised any term loans from any lender, hence this is not required. Third, an overall examination of the financial statement company that no funds were raised on short-term basis, which has been used for the long-term purpose. E, we have reported that the company has not taken any funds from any entity or person on account to meet its obligation of its subsidiary. And then F, that company has not raised any loans during the year through pledge of securities held in subsidiaries, joint venture and associates. Same is the one like in another example. Okay. If you see, the company has not been declared willful defaulter. Loans were applied for the purpose for which they were obtained. Funds raised, the company has used the fund raised on short-term basis, mainly intercompany deposit aggregating to this much crore for long-term purpose, representing investment in subsidiaries and loan given to them. So short-term funds used for long-term purpose has been reported over here. Then company has not taken any funds for any entity or person on account to meet specific obligation of subsidiaries. Company has not raised loans during the year through pledge of securities in its subsidiaries. So hence this requirement for this order is not applicable. So this is how we are required to report for loans one. Repayment of loans. Okay. So three things. Whether there is any so total 5 items in loan. Default in repayment, whether willful defaulter, and use of loan, that is whether for which purpose it were obtained and for which purpose it is used, long-term to short-term use, funds for subsidiary obligation, pledge of subsidiary share. Okay. This is for the repayment of dues. Para 3, clause 9. Next paragraph. Next clause of the same para 3, that is 310, okay, which says that the application of money raised by public issue. Now here we are required to report for the application of money raised. So whether money raised by way of initial public offering or further public offering during the year were applied for the purpose for which those were raised. If not, then together with the delays and default and subsequent notification, if any, as may be applicable. So whether we have raised the money through IPO or FPO, if yes, then whether the amount has been used for the purpose it was raised, and if there is any default, then the period of the default amount and subsequent rectification. So in most cases, you will see company has not raised any money during the year. So this clause is not applicable. So here also, the company has not raised money by way of initial public offering, hence reporting under this clause is not applicable. The second point for the same clause is preferential allotment. So whether the company has made any preferential or private placement of shares, if yes, then during the year, whether the requirement of section 42 and 62 of the Companies Act has been complied with, and funds raised have been used for the purpose for which the funds were raised. If not, then provide the detail in respect of amount involved and nature of non-compliance. So whether the requirement of section 42 and 62 of the Companies Act has been complied with, and whether the funds have been used for which they were raised. If not, then amount and non-compliance for the preferential allotment. Clear? Any doubt? Any doubt? Okay. Next para, we already saw some part of it in our section 143.12, that is reporting for fraud. Okay, 311. Now what is says there? Whether any fraud by the company or any fraud on the company has been noticed or reported during the year. If yes, then the nature and the amount involved. So any fraud without any limit, So any fraud, it's not above 1 CR, less than 1 CR, any fraud by the company or on the company has been noticed, reported during the year. Next, whether any report under section 12 or section 143 of the company, remember, has been filed in form ADT4, that is for more than 1 CR. Remember, if the fraud is for more than 1 CR, we are required to report to the central government in the form ADT4. So that's the one under subsection 12 of 143 in form ADT4. Whether the auditor has considered the whistleblower complaint, if any, received during the year. Very important. So now the companies are required to have a whistleblower mechanism. So whether the auditor has considered the whistleblower complaint, let us see example, how it is there. So based on the audit procedures, no material fraud by the company or on the company has been noticed or reported during the year. No report under subsection 12 of 143 has been filed by auditors in form ADT4 as prescribed in the rule setting of company's auditor and auditor rules. As represented by the management, no whistleblower complaints have been received by the company during the year. So like this way, it is required to be reported for fraud. Now, the next paragraph is with respect to the Nidhi company. So if it is a Nidhi company, then only this will be applicable. Okay. Compliance to the ratio. First of all, Nidhi company's ratio, 1:20. So whether if it is a Nidhi company, then whether they have complied with the net on funds ratio of 120 to meet the liability. Second, compliance with the Nidhi rules. Whether the Nidhi company is maintaining 10% unencumbered term deposit as specified in the Nidhi rule. So maintaining 10% unencumbered term deposit. Third, default in payment. Whether there has been any default in payment of interest on deposit or repayment thereof for any period. So if there is any default, we need to mention the default or payment of interest or deposit. So that is for Nidhi company. Very, very important point. The next one is transactions with related party. Now, whether all the transactions with a related party are in compliance with section 177 and 188 of the Act where applicable, and the details have been disclosed in the financial statement as required by the applicable accounting standards. Two things. One, compliance with 177 and 188 of the Act. Second, whether the details have been disclosed in financial statement. Let us see, how it is reported. Transactions with related parties are in compliance with 177 and 188 of the Companies Act, and the same have been disclosed in the notes to account in standalone financial statement as required by the applicable standards. Same in other example also. Company is in compliance with section 177 and 88 of the Act, where applicable for all the transactions with the related parties, and the details of related party transactions have been disclosed in financial statements as required by the applicable accounting standards. Clear? Any doubt till now? Okay. Let us see. We can take a MCQ, good one on this. Okay. So there is one MCQ, not in this topic, but a previous example, good one. This was asked not in MCQ, this was a question asked in exam. Gotham Limited borrowed 100 crores from XYZ Bank, the principal of which was repayable after 5 years and interest was payable at the end of each year. For 4 years, Gotham Limited paid the interest amount on time. Gotham Limited defaulted the fifth installment of interest payment and principal, which was due on 30th June 2021. On March 31, 2021, Gotham Limited approached XYZ Bank and MNO Bank to restructure the existing liability. As a result, the existing principal and outstanding overdue interest were restructured in the new loan of 1100 crores. The management did not provide, any disclosure for the default on the loan on the belief that the old loan ceased to exist and the new loan has a maturity of 5 years. During the statutory audit of financial year 21-22, KP Limited identified this transaction and obtained the relevant documents and understanding. Based on the underlying document, it was identified that the state restructuring agreement was approved and signed on 8th April 2022 by both of the banks. As a result, on 31st March 2022, the restructuring was still not approved. In the light of said scenario, kindly guide whether, whether the statutory auditor is required to report this transaction anywhere. So, as on 31st March, restructuring was not happened. The restructuring was signed on 8th April. Okay. So, there was a default on the last payment installment, fifth installment. Defaulted the last fifth installment of principal, which was due on 30th June 2021. So, what should be the reporting here? What should be the reporting? Okay, Shushni. See, what we are reporting is that when a word default comes into the picture, remember 3 9. Okay. When a word default comes into the picture, remember the word 3 9, para 3 9, para 3 subclause 9. What it says that whether the company has defaulted in repayment of loans, other borrowings, and in the payment of interest, the details of the same. Second, okay, then what is the next thing that we are required to report is, okay, whether we are declared the willful defaulter, end use of the loan, long term, short term, all these things. So if I go to the MCQ, here it was a default. Now that default is there, we need to report the default as per clause 3 9. First of all, the auditor is required to report whether the company has defaulted in repayment of loans and other borrowings or payment of interest thereon to any lender. Okay, so the default is there. I will be reporting the default because as on 30, the loan was due on of rupees 1000 crore on 30th June, but it was not paid interest installment of 100 crores, and till the end of the year. On 8th April 2022, the restructuring occurred. Okay, the restructuring occurred on 8th April 2022. Means it was still outstanding and defaulted as on 31st March 2022. So I'll be reporting over there. Now, so okay, the question will come why we are not reporting under para 3, clause 3. Okay, loans and advances, this one overdue for more than 90 days. Correct. This is where I have provided the loan. That is the one. Loans and advances given. But what we are talking about, loans taken, not given. That's why it will be 3 9, not 3 3. If loan given, then para 3 3. If loan taken, then para 3 9. Okay. 3 3 for loan given, 3 3 for 3 9 for loan taken. So this is 3 9. Clear? And this is the format in which I am required to provide the details. Remember, right now in the real example, I showed you the format also. This is the format for the default. Principal outstanding, interest outstanding. So this way I am required to report. Clear? Any doubt? Okay. Let us move forward then. Internal audit related paragraph. Okay. So, so it says that whether the company has an internal audit system commensurate with the size and nature of its business, whether the reports of internal auditor for the period under audit were considered by the statutory auditor. So two things, whether internal audit system is there compared to the size. Second, internal audit report were considered by the auditor, statutory auditor. Let's see how the actual reporting is done. The company has an internal audit system commensurate with the size and nature of its business. Second, the internal audit reports of the company issued till date of the audit report for the period under the audit have been considered by us. Means the report has been considered. Let's see in the second example. In our opinion, based on our examination, the company has internal audit systems commensurating with the size and nature of its business. We have considered the internal audit report of the company issued till date for the period under audit. So if they have considered, this is how it is reported. Clear? Next, non-cash transaction. Important one. Non-cash transaction with directors, para 15. Okay. Whether the company has entered into non-cash transaction with directors or person connected with him. If so, whether the provision of section 190 of the act has been complied. Okay. So if any company has entered into any non-cash transaction with directors or person connected with him, then compliance with 192, we are required to check. Very important. Okay. Let us see how it is reported. So the company has not entered into any non-cash transaction with its directors or person connected. Hence, the requirement to report on this clause is not applicable. Second one, company has here also the same, not entered into any non-cash transaction with directors or directors is holding subsidiary and associated company or person connected with them, and hence 192 of the act is not applicable. Clear? Any doubt? Let us see one question on this. CA Mr. Kush was perplexed concerning a reporting a transaction entered between Mr. Shyam and the company for the transfer of immovable property. You are being the engagement quality control reviewer. Kindly guide PA Kush concerning the appropriate reporting of the state transaction of Caro 2020. So there was a reporting of a transaction entered between Mr. Shyam and the company for transfer of immovable property. Where this will be reported? Where this will be reported? So para 3, clause 15, 16, 9 on 9. Which one is the correct one? Okay. Let us see one more, the next clause. What is the para 14? First of all, we'll see the MCQ and clause by clause comparison. Para 15. Our auditor is required to report whether the company has entered into a non-cash transaction with directors or person connected with him. If so, whether the provision of 192 has been complied with. This appears to be, but as of now, we'll park it. Second, auditor is required to report whether the company has entered into any non-cash transactions and other than being at the arm's length price with director or any person connected with him. This is para 3, clause 14. Correct? Now, if you see para 14, that is internal audit. So this is wrong. This is wrong, basically. This is related to internal audit, but there is something else. So this is wrong. 3.9. Auditor is required to report whether the company has raised loans during the year on the pledge of securities held in subsidiaries. Whether this is a pledge of security, answer is no. Then this is wrong. Next, para 9 says that, 3.9 says that auditor is required to report whether the company has revalued its plant property and equipment or intangible or both during the year. If so, whether the revaluation is based on valuation by registered valuer. Here it is the transaction entered between Mr. Shyam and the company. Okay, so there was Mr. Shyam is is a director over here. Okay, and Mr. Shyam has acquired an immovable property in the current case. So it can be said that this particular immovable property acquired by Mr. Shyam for non-cash consideration can be reported in this particular clause. This is also incorrect. Okay, so this can be an answer over here. Okay. Now let's go back to the paras. Registration with RBI para 3. Okay. Now, para 316, very important. Registration under section 45 IA for NBFC. Remember, NBFCs are required to register. So whether the company is required to be registered under section 45 IA of the Reserve Bank of India Act, and if so, whether the registration has been obtained. Second, whether the company has conducted any non-banking financial or housing activities without a valid certificate of registration from the Reserve Bank of India as per the Reserve Bank of India Act. So whether any, housing financing activity or NBFC activity has been conducted without a valid certificate of registration, whether the company is a CIC, core investment company, as defined under the regulations made by RBI. If so, whether it continues to fulfill the criteria of a CIC, and in case if company exempted or unregistered CIC, whether it continues to fulfill such criteria. Then whether the group company has more than one CIC as a part of group. If yes, indicate the number of CICs which are part of the group. So it is purely related to the CIC and NBFCs. Let us see how it is reported. The provisions of section 45 IA of the Reserve Bank of India are not applicable because this is a power company, so not an NBFC. So requirement to report under this clause is not applicable. Company has not conducted any non-banking financial or housing activities, so again this is not applicable. Company is not a core investment company, hence again not applicable. This is also not a core investment company, hence it's not applicable. Let me see one example where I might have, relevant. Reporting under this clause. I do have one company where the reporting under this clause is relevant. Just a minute. Let me pull up that example. Okay. I do an example. Let me go to that particular clause. Just a minute. Let me bring example in this. So let me bring on screen that example. Okay, I'll try to, actually it's not there. This is also not applicable over here. I'll try to find an example on this, but usually in most of, if it is an NBFC, this will be applicable. But if it is not an NBFC, then it will not be applicable. Okay. So see here, this is one of the application over here that according to the information and explanation given to us in the group, there are 16 companies forming part of the promoter group of the company, which are core investment companies that defined in the regulation. So this was one of the applications there. Okay. So Rest or are not applicable in the current case. Then next clause is cash losses. Okay. So here, whether the company has incurred cash losses in the financial year and in the immediately preceding financial year. If so, state the amount of cash losses. So here we are required to report if any cash losses are there. Let's see how it is there. The company has incurred cash losses in current year and immediately preceding financial year amounting to 282.12 crore and 523.31 crores respectively. This is how it is reported for cash losses. Okay. Okay. Yeah. Then the next point is with respect to statutory auditor resignation. Okay. Whether there has been any resignation of the statutory auditor during the year. If so, whether the auditor has taken into consideration the issues, objection, and concerns raised by the outgoing auditor. Okay, so whether any resignation of the statutory auditor during the year. If so, the auditor has taken any like consideration the issues, objection raised by the outgoing auditor. The incoming auditor, whether he has considered that one or not. That is a point that is very important and very, very relevant. Let's see one MCQ on this. CAA, the auditor of XYZ Limited, resigned from the post due to his personal reasons. CAB was appointed as a subsequent auditor of the company by the board of directors. During the conclusion of the audit for financial year, should CAB mention the CSA's resignation in the company's audited report? Pretty simple. Should he mention the reason over here? So yes, what is the whether he is required to mention the reason or not? See, let us see. Let us go back and re-see the the particular clause. Okay, so what it says that whether there has been any resignation of the statutory auditor during the year. If so, then whether the auditor has taken into consideration the issues and objections raised by the outgoing auditor. So here, the auditor has resigned because of the personal issues. There has not been any, concerns raised by the auditor. So in the current case, what will be the scenario? That auditor has resigned, but on the personal reasons. Okay, so so we will only say that okay. Let's see the particular options. Yes, as per the clause this of para 3 of Caro, CAB should report the resignation of CAA and State if he has taken into consideration the issues and objection raised by the CAA. No, since the reporting of resignation of CAA is due to his own personal reason, the same need not to be reported under Caro. Yes, as per the clause this of para 1 of Caro, CAB should report the resignation of CA and state that if he has taken into the consideration the issues objection raised by CAA. No, the Caro 2020 does not state any requirement to report resignation of the auditor. However, the same needs to be mentioned by CAB in the audit report under other meta paragraph as SA 706. So, which is a particular clause we are reporting here is 318. Now, this is the incorrect one. 318 requires that B should report that the resignation of CAA and whether the reasons have been taken into whether any objection consideration of issue and objection has been done or not. So that's the correct answer. We are required to report the resignation, but we also need to report that, okay, what was the reason and any objections, issues and objections raised. So we'll say the CA has resigned, but there was no objection raised over here. So whether there has been any resignation, yes. If so, whether the auditor has taken into consideration the issues or objections. So if there is any issue, then only we will see. Clear? So very good question. Now the question is, consideration of issues should be in writing or like they should have a knowledge about it. It's an oral or written one. Now see, there is a way when an auditor resigns, there are certain, formalities that are required to be done that we discussed when we were discussing removal of the auditor. If you see at that time also, if I go back and show you that, resignation by the auditor. So within 30 days, a reason for resignation is required to be filed. In case of a failure, there are penalties. So this reason for resignation contains the detail that we are required to check that why the outgoing auditor resigned. And accordingly, whether we need to see whether any objections or concerns have been raised or not. So this is directly related to my section 140, okay, where that has been, a statement is required to be filed. And accordingly, I need to correlate the same. In this also, here the auditor has resigned due to personal reasons. B was appointed. So yes, there has been resignation. Okay, I need to report as per para this of Caro and any observation or any issues or objections raised by that CA. So that will be the correct answer. Okay. Let us move to the next para and clause. Material uncertainty. On the basis of financial ratios, aging, expected dates of the realization of financial assets, payment of financial liabilities, other information accompanying the financial statement, the auditor's knowledge of the board of directors and management plans, whether the auditor is opinion that no material uncertainty exists as on the date of the audit report, that the company is capable of meeting its liabilities existing at the date of balance sheet and when they fall due within a period of 1 year from the balance sheet. What it is asking that whether the company is sound, okay, and not now, but for next 1 year. If you see over here, so whether the company is capable of meeting its liabilities when they fall due within a period of 1 year. So we need to report whether we think that, okay, company is, able to meet its, liabilities in the next 1 year. Let us see. On the basis of financial ratios disclosed in note 62, the aging or and expected dates of realization of financial assets, payment of liabilities, other information, financial statement, our knowledge of the management, board of directors plan, and on our examination of the evidence, nothing has come to our attention which can cause us to believe that the company is not capable of meeting its liability. existing or at the date of the balance sheet as and when they fall due within a period of 1 year from the balance sheet date. As at the balance sheet date, the company's current liability exceeds the current asset by this much crores, and the company has obtained letter of financial support from promoter of group company. So there was a liability which exceeded my asset, but I do have a letter of financial support from promoter group company. So there is nothing to concern. Let's see another one. So here also cash losses are there. Based on the examination of records, company has incurred cash losses of this much amount in financial year and this much in immediately preceding financial year. No resignation. Okay. Now here, based on all the information and everything, that indicate evidence supports assumption that indicates that material uncertainty exists that may cast a significant doubt on the company's ability to continue as a going concern. We further state that our reporting based on the facts up to the date of audit report, and we neither give any guarantee nor assurance that all liabilities falling within a period of 1 year from the date of balance sheet will get discharged by the company as and when they fall due. Here, there is a qualified remark. Qualified remark has been given with the reason why, and accordingly that has been provided. So this is a qualified remark. Okay. This is how a qualified remark is required to be given for the material uncertainty. Clear? Now, there was a question whether cash losses are theft. Answer is no. Cash losses means you have actually incurred losses which are in cash. Means cash has gone out more. For example, you earned cash of ₹100 from your revenue, but you have paid 120 rupees as an expense, as an outgoing during the year. So cash losses. Any doubt till now? Okay. Let us go to the next paragraph. Para 320, unspent CSR. This is with respect to CSR. Whether in respect of other than ongoing project, the company has transferred unspent amount to a fund specified under Schedule 7 to the company set within a period of 6 months of the expiry of financial year in compliance with the second provision of Section 5 of 135 of the Act. So this is with respect to the transfer of funds other than ongoing projects. Okay, as per second provision of subsection 5 of Section 135. Then whether any amount remaining unspent under subsection 5 of 135 pursuant to any ongoing project has been transferred to a special account in compliance with the provision of subsection 6 of 135. So this particular clause requires us to report upon the compliance of CSR, that is section 135, subsection 5 and subsection 6. So amount unspent under subsection 5 pursuant to ongoing projects transferred to a special account. If yes, then the details of that. That was CSR related. Let us see how it is reported. So here there are no unspent amounts which are required to be transferred to a fund. There are no unspent amounts which are required on the ongoing project that are required to be transferred to special account. Okay. Another one. So here, if you see, based on the examination of the records and information explanation given to us, due to losses incurred, the conditions of the and requirement of section 135 of the Act is not applicable. So company is doing losses, hence 135 is not applicable. Let us see this one. So company does not have any amount remaining unspent other than the ongoing projects, and company does not have any amount remaining unspent, okay, for any ongoing project. So there is nothing required to be transferred. But there is one another paragraph that I want to discuss over here. See this one. During the year, the erstwhile statutory auditor of the company resigned consequent to the completion of their tenure in terms of guidelines of appointment of statutory central auditors, statutory auditors of commercial bank, excluding RRBs, UCBs, and NBFCs, including HFCs, dated 27 April 2021, issued by the Reserve Bank of India. According to the information and explanation given to us, based on the no objection certificate obtained by us from the outgoing auditor, the outgoing statutory auditor do not have any issues, objection, concern in respect of their resignation. That is with respect to the resignation, and this is for the going concern. So see how it is there. According to the information and explanation given to us, on the basis of financial ratios, aging, expected date of realization of financial asset, payment of liabilities, other information, okay, our knowledge of board of director and management plan, based on our examination, nothing has come to our knowledge and attention which can cause us to believe that any material uncertainty exists as on date of audit report or the company is not capable of meeting its existing liabilities. However, we state that this is not an assurance to the future viability of the company. We further state that our reporting is based on the facts up to the date of audit report, and we neither give any guarantee nor any assurance that all the liabilities falling due within a period of 1 year from the balance sheet date will get discharged by the company when they fall due. So this is how it is reported for the going concern. See, very good question. What procedure that the auditor needs to perform to identify cash losses? If you see the cash flow statement, you will directly see what is the operating net cash flow from the operating activities. Now, if there is a negative amount of negative net cash flow from the operating activities, means there are chances the company has incurred cash losses. Sometimes some auditors take that number as in cash loss, but usually, what is the cash loss you need to understand? Cash loss is something, the amount you have spent versus the amount you have received from the revenue operations. At times, it requires some adjustment, but most of the times it is, you can say, that is the amount which is, net cash flow from the operating activity. That is will be here, near to the cash loss. I hope I'm clear. Any doubt till now? Okay. The last one, Caro reporting in consolidated FS para 321. Now, whether there have been any qualification or adverse remarks by the respective auditor in the Caro of the reports of the company included in the consolidated financial, if yes, indicate the details of the companies and paragraph numbers of the Caro report containing the qualifications. Now, this is only applicable for the consolidated financial statement. That's why you will not see over here. The requirement of 321 is not applicable in respect of standalone financial statement. But in respect of a consolidated financial statement, this is applicable. And let me show you one consolidated example, consolidated financial statement, Caro. Just a minute, let me present you. Okay. Yeah. So how in consolidated financial statement this particular is reported? This is for the consolidated financial statement. See this one. With respect to the matters specified in para 3 of 21 and 4 of the company's auditor report 2020, Caro, issued by the central government. Let me zoom in. Yeah. Okay. Para 3, 2020, para 321 and para 4. Okay. For the qualified opinion. So what 321 says that if there is any qualification or adverse remark in respective auditor's Caro report for a subsidiary for a consolidation, if in standalone, if there are any qualification or remark, then details of company paragraph numbers containing qualification and adverse remark. Okay, so if you see over here, so para 4 talks about the qualification and adverse remarks. Okay, and para 321 for the consolidation. So this says that with respect to the para 321, 4 of the Caro issued under 143(11) of the Act to be included, and based on the Caro report issued by us for the parent company and the Caro report issued by the respective auditors of subsidiary company, including in the consolidated financial statement to which reporting under Caro is applicable, the adverse and qualified remarks are. So see, this is the name of the company, SIN, holding subsidiary associate the relationship, the clause number of which Caro report where, which is qualified or adverse. Para 3, 9A, this 319, 37, 32, 319. Accordingly, see, this was the first we were looking. If you see 39A, I'll go to this one. See 398. So where there has been default on loan, there's a negative remark. Okay, the same has been mentioned over here. And 319. Over here, going concern. Okay, there was also a negative adverse remark. So the same has been mentioned. Same way in each and every individual Caro report, wherever there is a negative remark, that will be mentioned over here. And this is how we are required to provide the summary, okay, in our consolidated financial statement. So for consolidated financial statement, only one of the paragraph is applicable, that is 21 of para 3, clause 21 of para 3, which requires that in each of the individual Caro, if there is any negative remark, please specify that negative remark with the name of the company, SIN, holding subsidiary or associate, and the number of that particular paragraph or clause in the Caro para 3. Clear? So this was Caro 2020 para 3, all the clauses. I showed you with the respective live audit report so that you can have a good clarity. Also, we covered MCQs. Wherever it was possible, I covered all the MCQs so that you can have a more clarity. Any doubt till now, guys? Or what you can do is, okay, if you have further doubts on any of the point in the Caro, any of the point, okay, I'll suggest you revisit this lecture. Okay, if you still have the doubt, in the next lecture we will be here. You can discuss you can, bring that doubt up in your questions and I will be discussing. If time permits, I'll definitely discuss that out. So most important, remember the paragraph numbers over here, clause number, paragraph number. Okay, that is very important. So most of the people, ask whether we need to remember the clause number. Answer is yes, you need to remember the clause. That's why I have prepared, notes in a such a way that after each of the particular, points, I have mentioned a paragraph. Paragraph 3, clause this, so that you can easily remember. See, okay, with respect to the notes, professional ethics and company audit are already there. You can identify in batch 5. For this Caro, after this lecture, I will be uploading, because all these comments and MCQs, I will be uploading after this lecture. Any further doubts? Any further question, guys? Very important topic. Very important. Okay. If no further doubts, what we can do is I'll keep it till this. Also, please provide me your feedback on the mobile app or on the portal. It is very important for me to understand what are the things that you need and you need more focus on, or you require from us. That is very, very important. Boni, if you go on the portal, you will be seeing, paper 3, batch 5. So there are, notes uploaded for the batch 5 also. I'm not sure why you are not able to see, but for the batch 5, the notes are already uploaded over there. Even for the batch 4 also, you will be able to see the notes. So do let me know if you can see the notes over there. Like if it is still the same, then okay. So there is, contact details given on the BOS website. If you go to the BOS website, there is a, contact details given. If you have any details, if you need any, like, so if you need any help, they can assist you over there. So there are, mail IDs also given, audit dash final at the ICI.in. Okay, you can mail it on to them. If there is a phone number given, landline number, you can reach out to them. Okay. So what I'll suggest is visit the website. Over there, detailed communication and contact details are given. Use those contact details to see if they can help you to resolve your error. Uh, I'm sure that they will be able to help you to resolve your errors. Okay. So thank you guys. Thank you for joining today. Please provide your feedback. I'll see you in the next lecture. Thank you.